All right. Thanks for joining me again for special coverage of markets in turmoil as we come off the lows after the market open in the U.S. We hit circuit breakers, then we hit the 7% circuit breakers, and now we are slightly off the lows. At some point, the volatility level that we have gone up to, which is very high, reaches an equilibrium. Are we here now? We don't know, but we haven't seen like the huge spike that some people predicted from here. If we look at the VIX right now, we can see that the VIX did not make a new high today so far. If we look at markets, Nikkei now off the lows. If we look at the NASDAQ here, the NASDAQ did not break its low of a few days ago. Although if we look at the S&P, the S&P did break its low of a few days ago. So kind of a mixed message from markets here. But stuff has kind of popped off the lows here. VVIX up 9, which seems significant. TVIX, we reached a new high before the open of 551, now below 500. It feels like stuff is kind of stabilizing here a little bit. Having so much of a down move already, each additional pop in the VIX and down move starts to, once option prices get so high, it's hard to get that huge fireworks on another down day. So I think this is encouraging that the VIX has not made a new high. Markets can lead everything else. And as soon as there's a feeling that, the apex of this crisis could reach the U.S., we could see a little turnaround here. So a little bit of I know it sounds like crazy to say, with the Dow down over 2,000 that things are okay. But here we see the VIX has not made new highs. So this could be a turning point here, folks. I know there are bargain hunters out there for these equities, and people will be buying stuff as we continue to trade moving forward here. The TQQQs, for example, here got down to a low of 38.34, but have since headed a little bit higher. I know there's a lot of concern among people that the TQQQs could run out of money or something, but it seems like the dam is held here, and we are on the lows. We're not on the lows right this moment, but we could revisit the lows again. But for the moment, we appear to be stabilizing a little bit here in the markets. It's good to see stuff actually not on circuit breakers. I like to see the markets actually trade and see buyers and sellers operating in these markets. We'll see if it looks like we're heading a little bit lower. Now we might retouch the lows again, but we will reach an equilibrium at some point, and these markets will recover. So keep that in mind as we move forward. I know a lot of people have shorted into this market, and some people have made good money, and that's great. I love to hear people making money. For every buyer, there is a seller and whatnot. We are seeing stuff stabilize a little bit here. Let's go through some individual issues and take a look. Okay, so first we have Tesla here. Now, Tesla has obviously gotten destroyed. It's gone from a high of 968. Now we're down around 450. However, if we expand the chart a little bit, we can see that 450 is still higher than it was. Tesla is up on the year, right? Big time. It's up big time on the year right now. Think about that. That's craziness. Somebody's talking in the chat is talking about VIX Central. So interestingly, the guy who runs VIX Central, Eli Minsk, who I will pull up his Twitter account right now. Eli Minsk actually came out with an interesting tweet yesterday. And let me see if I can pull it up for you here. So let's see if this is working correctly. Yeah, Elon Musk came out with an interesting tweet about the markets possibly closing. Let me see if I can pull it up for you here. He's usually not all that vocal, but let's see if I can find his tweet here. Here it is. Elon Musk, maybe a 5% limit is not appropriate for a VIX of 70. Maybe the limit should be a function of the VIX. After all, if the limit move is likely, it does not serve its purpose. So this is kind of commenting on a little bit of what we were talking about last night, which was like the limit down didn't almost seem appropriate yesterday, in that all it did was retrace the last hour of trading. And, we were limit down all night, but it almost seemed like that limit was too, although the circuit breakers do have a purpose, it almost seemed like that circuit was too tight last night. Like we reached it right away, and it wasn't even really all that down. Let's go back to Elon Musk for a second and see what else he has to say. The person that runs VIX Central is an interesting guy. I've tried to get him to come on the show. I haven't been successful as of yet at doing that, but hopefully in the future we will see him on the show at some point. Let's see what else he has to say. It's interesting. This whole, here we go. Vance Harwood. Oh, that's old. It's interesting to see what these guys have to say. I remember what I was going to say. The VIX, the YouTubers are not really allowed to talk about this whole situation and actually use the words for this situation, because we are demonetized if we do that. I think YouTube had that in place so to combat misinformation. They didn't want people coming on and giving information that would make the situation worse, but it has made it so that if you even mention the current situation in your videos, you get demonetized, and that was very frustrating for people until they realized that was happening, and then they realized ways around it. So TQQQ, I bought TQQQ, paid 48 on Friday, and now it's 42. It was 38, so it's coming back a little bit, which I like. I feel like we're stabilizing here a little bit, which is great. The farther we move down, there is actually, when we were way up there, it wasn't like there were a lot of buyers at all. But as we move lower, there's more and more buyers, just because it makes sense. I mean, stuff is becoming more and more of a bargain as we move lower. Some of these products have just gotten killed. Let's look at CCL for a second. This was one of the ones that I purchased just because cruise lines, the epicenter of this whole thing has been cruise lines, luxury goods, conference centers for businesses, this sort of thing. And this Carnival Cruises, it went from 50 to 15. Okay, so that's more than the general market has gone down by far. So I've been looking for equities that are down a lot more than the general market, at going bargain hunting in a sense. And I would encourage you to do the same. Look around, see what's out there as far as bargain hunting. Now, you don't necessarily want to put all your money in stocks right now, but just as we do in other situations, you can scale in, buy a little bit here. If it starts to move lower, maybe buy a little bit more, and that sort of thing. That way you're kind of averaging your price down as things go lower. Some of the stuff I've bought, I don't plan on selling for quite some time. Give it a chance to kind of stuff to kind of come back. As I've said before, we will stabilize at some point, and the stock market is definitely ahead of the curve on a lot of things, and will most likely be ahead of the curve on this situation. People are looking for any sort of good news here, and so I would caution people against like getting blatantly short a bunch of stuff, because we already have moved down quite a lot. Now, I don't expect volatility to just die. We won't. It's pretty easy to say. It's pretty easy to say that I'm going to comment on what you said there, Ed, in a second. So it says the 3 times leverage products get destroyed in volatile times because of the daily rebalancing. That is certainly a factor that if you have a 3 times leverage fund and a particular movement of it really hurts it. What hurts it the most is if you have a big up day and then a big down day and then a big up day. If you've got just either not moving that much or similar days in a row, if it's up a lot one day, you don't have to rebalance if it's up the second day because you already are set up for the proper proportion for a move. However, if it moves one direction a lot one day, then you have to rebalance, and then if it goes the opposite direction the next day, then is what's going to create the maximum amount of decay. And that kind of decay in leveraged funds, I like to refer to it as beta drift. And it certainly affects the 3 times leverage funds more than the 2 times. The more leverage, the more it affects these funds. Now, you're not going to notice, it's not like a massive effect, but it certainly will affect them over time. And this is the reason why people are encouraged not to hold on to these things for long periods of time. Because if you take a product like the TQQQs, for example, that offers 3 times leverage, what you'll find is over time, if you're long it, the leverage to the upside is more like 2.5 times or 2 times, and the leverage to the downside is more like 3.5 times or 4. It's not going to perform over a long period of time. Although day to day they rebalance it, so it will perform at pretty close to 3 times. In a single day. Over a longer period of time, you'll notice that to the upside, it's not going to quite make that 3 times leveraged, and to the downside, it's going to move more than 3 times to the downside due to the beta drift and the rebalancing. So thank you, Ed, for bringing up that point. That is a very important feature of 3 times leverage products, and that includes any 3 times leverage product, whether it be nat gas or the gold miners or what have you. And interestingly, for me, I was researching these 3 times leverage products, seeing how I could make money based on this beta drift decay. And through researching those products is how I came upon the VIX and the VIX complex, because VIX products offer not only the leverage products offer not only that beta drift, so TVIX offers that beta drift, but they also offer decay due to contango when we were in contango. Right now we're in backwardation, so backwardation effects are going to be in the opposite direction of beta drift functions. So they kind of will cancel themselves out to some extent. In fact, now with us being in backwardation in VIX to the tune of over 20%, that effect is going to, in cases, be stronger on TVIX than the decay from beta drift. Because remember, TVIX is only a 2 times leverage product, and UVXY is a 1.5 times leverage product. And the difference between a 2 times and a 1.5 times leverage product as far as beta drift goes is enormous. It doesn't seem like it would be that much difference between 1.5 times and 2 times, but UVXY decays a lot less than TVIX. Because of its reduction in leverage that occurred after the Volmageddon. All right, so once again, it appears for the time being markets are kind of stabilizing a little bit down a ton. Let's see how much the NASDAQ is down right now. So the NASDAQ down over 8%. And the S&P down over 9%, with the Dow also down over 9%, and let's take a look at the Russell 2000. The Russell 2000 has been the worst performer by far lately. So Russell 2000 down almost over 10% now. Arbitrage to capture beta drift. Well, one of the ways we can measure beta drift is just comparing a product that is not leveraged to one that is. But what I thought about to capture beta drift initially was I said, well, and I was looking at NGAS, DGAS as the products that I wanted to try to capture beta drift in, NGAS and DGAS being the leveraged funds in natural gas. And my idea was like, well, what happens? What would the way to capture it might be, well, you just short both of them, right? So, or you get short deltas in both of them somehow. So my idea was you sell out of the money calls in both products, and eventually they're both going to go down, right? Because regardless of direction, they're both going to decay over time. The issues that are related to this, though, that make it a trade that maybe you don't want to do are A, it ties up cash. B, you need to balance your short in one with your short in the other. So you yourself, if you put a position on, have to kind of rebalance. And if you get, if you're just selling naked calls or something like that, out of the money calls, then if you get a situation where one rips heavily to the upside, then all of a sudden you have rebalancing problems, you've got cash tied up, and you've got risk. So it's a little trickier than just shorting both of them and leaving. I mean, if you had all the money in the world, you certainly could do that and it would make money over time, but it can tie up capital for long periods of time. And if you get a trend in one of them one way, then you end up in trouble. So that's why it's not been a super obvious short to short beta drifting products. All right, so we seem to be stabilizing. So let me ask you. So Edward, what is your take? Are you shorting stuff right now in the market, or are you long stuff? I think people already know my take. I am long the market still, long and wrong. You can call me Long and Wrong Dave today. I never professed to be good at picking direction in the markets, and I am certainly long and wrong today. We'll have to see what happens over time. I'm interested what you folks are doing who are in the chat right now. Are you just on hold? I mean, it's not really too bad of a strategy to just be on hold for now in the markets. It's a crazy time, and just sitting back and watching it's a lot less stressful if you don't have a bunch of skin in the game, of course. I feel comfortable with the stuff I've bought because I know it's going to be for a long term, but I can understand how people would not want to play anything right now with the stress associated with what's going on. So let's see. So Edward says, I've been shorting stuff. My take is that the market hasn't priced in the bad news headlines to come. Oh, so there you go. So yes, we could see a lot more bad headlines. We're just about to have earnings are going to come out in the next month, and legally companies, and I'm actually ripping off this statement from Theotrade. So credit to Theotrade for this statement, but companies are required by law to warn if they're going to have bad earnings. And so we will see a lot of companies ahead probably warning in the next few weeks. Ed has a very solid trading strategy in the chat. It's worked several times in the past, so you can maybe follow that strategy. So, well, the soothing voice has partially to do with the fact that my upstairs neighbor is sick, and I don't want to disturb him unduly. We're going to get a report from Italy later on in the week, which should be exciting. I have several guests lined up to come on eventually. People have had stuff outside of, surprisingly, people have had other things besides my YouTube show that they had to do in their lives lately. And so some stuff has been put on hold for the time being, but it seems like there's going to be a lot of people sitting at home with nothing to do for a while. So it's a good time to be producing YouTube content. Let's take a look at VXX. Once again, just to show you my position in VXX, I am long this long and wrong once again. I'm long the 36-33 put spread. in VXX. Yes, I have an Uber. I'm set up to do Uber, so I'm reading Edward's comment here. I stopped Uber driving. I'm set up to do Uber, but I'm kind of hesitant if I want to expose myself to random strangers through Uber. It might be best just to avoid that for the time being. So VXX here off the highs. Let's take a look at the daily chart for VXX here. And we can see we're starting to catch a little bit more of a bid in the VIX again here. And let's see if VIX has actually taken out. For me, it seems crucial, not crucial, but it would be interesting to me if the VIX is unable to take out the high today. But we see some of these starting to catch a bid. Let's take a look at, okay, so this is the main future. The symbol would be on Thinkorswim VXJ20. This is what all the VIX products are almost entirely based on this future. So this would be really the one to watch. This is going to control the movement of UVXY, VXX, TVIX. So this is really the future to watch. This April future 54 right now. It's currently discounted to the VIX by 20 points, which is a huge spread. I've talked a lot about watching the spread between the futures and the VIX. Now, this isn't the front month future. The front month future is $9 lower than the VIX. So just to keep in mind, we're coming into expiration Wednesday. This front month future will converge with the VIX by Wednesday. So if we don't get some sort of down move in the VIX, we will see these products move higher into Wednesday because now, remember, of course, that the front month future is not a huge component of these products, but it still is a small component of these products right up until the last day when it is not part of the products at all. So most of what we're watching is the distance between the VIX and the second month future, which is huge right now. 21 points is a huge difference. It's trading at a big discount to the VIX. I think that being because there is an anticipation that the VIX will come off the highs at some point soon. But if the VIX stays up around 74, these products, once again, will be dragged higher. You know, it's just an amazing move in TVIX up to 500. This is the thing that, you know, we warn about with people. Fortunately, there's not options in TVIX, but, you know, an amazing multiple from 38 to 500 in what? A month? That is just a huge, less than a month. That is just a huge, huge move. I have some extra toilet paper, Ed. I can send it to you if you'd like. All right, so that's where we are. Market's very volatile, and off the lows, that NASDAQ keeps bouncing around that down 666 level. A little spooky there. And that's kind of where we stand. Hope you guys are doing okay. I have to actually go out and do some stuff, but we'll be back later with more coverage on the unfolding events here in the market. Let's see what else we've got. We've got Tesla. Just an amazing chart in Tesla. Let me get out of the way here. And I didn't have the, I was short it for a while. I didn't have the conviction to say short it. I'd be interested to see what people, these firms that were short this, I wonder if any of these hedge funds were able to hold on all the way up to 900 and all the way back down. I'm sure there's going to be books written about this period of time. We haven't heard from funds that have blown out, but I'm sure there are funds out there that have blown out selling options. A lot of the media has been publishing stories about the fact that the ticks are very wide in these products. So if we look at the E-minis for a second trading, if I pull up the trading screen on the side here, we can highlight that for a second. There have been articles written saying that the ticks are a lot wider than they have been. So when we see this trading here, this is the E-minis, we can see it's quoted in 25-cent ticks, but a lot of firms are quoting it like $1 wide and stuff. And you watch it trade here, you can see it moving all over the place. And when it gets more volatile, it moves even more, and the time and sales can't really keep up with it. You can see the bid and offers on the left side, and then the time and sales on the right side. And when it really gets going, they are separated from themselves. It seems like the bids and offers are the fastest to update, and then the time and sales comes later, but sometimes that jumps around. Let's take a look at what the NASDAQ one looks like. A lot of professional traders end up just glued to their screens. And look at how wide the NASDAQ is. It's like $3 wide in many cases. The computers are not quoting like quarter-wide increments at all. It looks like they're quoting like $2, $3 wide, a lot of these firms. What we can pull up is a level 2, which would show us what the individual firm's quotes are right here. And you can see it's very thin. There's in slower times you would see much higher numbers on each side of the bid and offer here, but you can see it's very thin here today, and showing pretty much, if you look at the difference between the bid and the offer, it's staying at pretty much $1 to $2 wide, and that liquidity is just a function of how much how much risk people are willing to take on each side. And it makes sense that this should be able to widen out in crazy times, because if these guys cannot make the market that they can be successful with to some extent, they can't stay in business. And we need market makers and liquidity providers to stay in business to keep our economy running. So that's interesting. Yeah, I mean, I've been criticized a little bit for my positive vibes, but I think it is very important to stay positive here. Remember, there's more important things in life than trading the stock market, and don't get too caught up in this stuff, because stuff turns around pretty quickly around here. NASDAQ now down 600. I would love to see the NASDAQ come off of this down 600 area. I think it was down like 800 before. I would love to see if we rallied to UNCH today. That would be like a beautiful thing. I don't know if it's going to happen. Once again, VIX off the highs here. It was kind of going back up. To see where the VIX is going, another way is just to watch TVIX. Now TVIX, I think it got up to like 550, something like that. Let's take a look at the chart for today for TVIX. Oh, it got up to 520. So we're not very far off the highs in TVIX. Here you can see the market kind of rallying. The VIX products they're kind of in a holding pattern here as the market starts to come back a little bit. There's really the story of the day. We have the gap down, and then the market kind of struggling back, backfilling and struggling back a little bit here today. Let's take a look at some other equities. There's Apple. Apple has hung in there pretty well. The other one that I've been looking at is Microsoft, because Microsoft has been incredibly resilient. It's really interesting because Microsoft is a company that really underperformed for many, many years. It kind of didn't move for a really long time. When other tech stocks were doing great, Microsoft really didn't move. Now, I'm not sure what jumped it into gear. It might have been a lot of their cloud technology. I know Amazon's been like really the leader in cloud technology, but Microsoft, I believe, has also gotten into the game. But for whatever reason, Microsoft has remained strong. And I believe it's another one like Tesla that is up on the year. Let's take a look. Maybe not. No, it's no longer up on the year. It was a couple days ago, but you can see if I get out of the way here, this period, and if we move this chart back even further, you can see it was just hanging out in the same area for like a huge amount of time. Let me see if I can make this even farther. Let me go back here. It stayed in the same place for a very long time. Let's see if we can do 2000 to present. Let us do that. Well, so this shows like it shows the uptrend starting in, when is that? That's like, let me see if I can. It looks like 2017 is when it started making a move up, but it was really pretty mellow for a long time and not doing a whole lot. But I mean, look at this action, the most recent action. And when you look at Microsoft, you think, wow, the market could really, if you look at Microsoft, you think, wow, this could sell off a lot more. But this is in a minority of stocks that really hasn't sold off as much as the other ones. Look at that trend, though. Bill Gates has made a couple bucks. And it looks like NASDAQ, we might break the down 600, and we just have. This market is coming back a little bit. So many people looking to the downside here. So many people have puked out of their stock. So many people were shorts coming in. We'll see if this can battle back. It appears it really is a battle, but it appears that the NASDAQ is battling its way here back up. And the thing is, at some point, those who are going to sell out of their stocks have sold them, right? And we still have people, even though some people, there's not that much work and stuff like that, we still have people whose 401ks every week are putting money in the stock market. We have people who are new to the markets who are coming in and saying, wow, this is a great spot maybe for me to start in the markets. I was never into the stock market, but I can scoop the bottom here. I mean, that's a simple thing for people to understand, that like, wow, the markets are way down. This is maybe a time to get in. We also have people who got out of stuff who are saying, what am I going to do with my cash now? You know, there's no point in buying bonds because the rates are so low. Maybe I should scoop a little here. And as I said before, we will find an equilibrium in this market. And is the current level, which is SPX around 2,400, is that the level? Will we go through 2,000? I don't know. But I would think that there would be a huge amount of support at the 2,000 level in the SPX if we get that low. If we rally today and tomorrow, will they keep the markets open? That's the question as well. We did not. I was kind of fearful that we could hit that 13% down circuit breaker, but it appears that at least so far today, we have not reached that point. And it would take, I think it would take pretty bad news. We'd have to almost go down twice as much as we are now to make that down 13%. And I think it would take extraordinary bad news for that to happen. So we starting to catch a little bit of a bid here in the market, folks. Let's take a look at SPX option pricing real soon here. So one of these days is going to be the bottom of the market. Will it be today? Take a quick look at SPX options, and you can see, wow, front week volatility over 100 in front week options here, folks. 4 days to go, over 100. If we go out to a week out, 90 volatility in SPX options. And you have to realize that as you move lower, those out of the money puts are even higher than that. I mean, this stuff is cranked to the moon. I've been a broken record, but if there ever was a time to sell volatility, it's here. Now, I don't see, it would be very hard for somebody to like have held off until now to sell volatility, have to be calm enough to say, I'm going to keep holding off to sell stuff, and then to pick till now to hold off. You would have to have a very calm demeanor for sure. So just looking at some option prices in VXX. So what strikes would we have to trade a month out to double our money? Just out of curiosity here. So if I were to buy, let's say, the 46 put and sell the 42 put, if we got back to 42, that would double the money. Month to go. Now remember, if the market closes for a month, these trades are not going to work out. Let's see where the trade I put on is right now. So if I were to sell out of this spread, I'd sell out at 83 cents. Now, I paid $1.15 for this spread. If I sold out right now, I'd be at 85 cents as we inch a little bit lower here, folks. Let's see where TVIX is right now. TVIX 492. So we're only $30 off the high in TVIX. So nothing to completely write home about, but we do have a little bit of a comeback going on here, folks, in the market. So that is encouraging, I would say. All right. So yes, Dave Modell, calmer heads will prevail. Life goes on, folks, and this market is going to come back. Volatility is definitely going to come in. And so the key is for you personally to manage your risk effectively so that you can be here to take advantage of the market when things come back. There is a chance that we will close for a while, so keep that in mind. Use today. If you have weekly options that are going to expire in the next couple weeks, I would use today to either get out of them or roll them farther out, because it's just stressful to be caught in the uncertainty of the markets closing and not knowing when they're going to reopen and not knowing what's going on with your account. Remember, if stuff's closed, you can't get out of stuff if you need cash quickly. So I would recommend, if you have weekly options on right now, that you close out of them for the time being. There is some possibility, I don't know the likelihood, but there is some possibility that they do close the financial markets for a little while if there's worse headlines. Ed, correct. It is hard to call capitulation. Capitulation, in my mind, doesn't look like this. Capitulation looks like we're going straight down. Everybody's giving up. It's the end of the world, and it's like a massive move down. Like if we were to go down to the 13% level in like 10 minutes, and then were to bounce to up on the day, that looks more to me like capitulation. However, in a sense, we are in new ground here, and there's no fixed formula for what equilibrium coming back into the market has to look like. A real dead cat, I saw somebody using dead cat bounce incorrectly the other day, but a real dead cat bounce would be, okay, we stay down here and the market stays in a tight range, but doesn't recover and doesn't go lower, but just stays in a tight range for, 2 years or something. That would be a real kind of dead cat bounce type situation, and where volatility, where we don't rally, but nothing moves and volatility comes in. The VIX is manipulated. Okay, so the VIX is based on a formula of option prices sampled in the S&P 500. So those options that are sampled could certainly be manipulated, in that some of the strikes don't trade all that often. So, and we see this on expiration day for the VIX. If there's a strike for an option that is, let's say it's an out of the money put, it's about to expire, and the market is like no bid at $5. If somebody just sneaks in a 20-cent bid or a 50-cent bid, then all of a sudden that option gets priced a lot higher than it maybe should be, and that is kind of a manipulative effect. So there are ways, and we definitely see it on expiration, that stuff is manipulated to right on expiration day. In a more general sense of like, the VIX being 70 today versus 50 another day, it would be a lot harder to actually accomplish that, because you would have to drastically move the markets in the SPX. And as I've said many times before, the SPX accounts for 80% of the trading in the world, and nobody is really big enough to affect the SPX for any period of time. If there's a brief pocket during lunch or something when nothing's going on, maybe you could affect the options slightly, but it's just such a big thing that manipulating it would be very difficult to accomplish. So your question, Ted W, or TW, is that whereas it is technically possible to manipulate the VIX slightly at times, it's technically possible to manipulate something, certainly, and it's technically possible to manipulate things in the market, especially very illiquid things, but in a more like a bigger sense of like, they're moving the price of the VIX. It's not possible over a big period of time. I'm sorry. While technically possible in practice, it's not. It's very hard for us sometimes to understand these things, because we just see numbers flashing on a screen, and you think, well, could someone just somehow who's behind the data feeds or something just change that number and nobody notices that, like, they've taken the computer offline and changed the number? Well, that's certainly possible too. However, when we're looking at the VIX here, I can go right now to the SPX, which is where the VIX comes from, and I can look at the options. That's what we were just doing. And if I look out here, remember the VIX is 30 days out. If I pick an option strike that's 30 days out, like this April, I can actually see, option volatility here is 74. That's what the VIX is, right around what the VIX is, 75. And I could even go into the individual options and pull up implied volatility, and I can see the volatility of the option. So I can check my math on the VIX, and because this is where the VIX comes from. It comes from options 30 days out in the SPX. I can go 30 days out in the SPX, and I can kind of check my math here. Now, Thinkorswim isn't always completely accurate as far as implied volatility, but I can quickly go and check my math here and see where the VIX is coming from, and see, 30 days out, it's showing 73.7 vol. VIX is showing 74.9 vol. It's correlating. And that's how I know right now that it is not manipulated. Yes, people complained to the SEC before that the VIX was being manipulated, and that was during expiration. The VIX comes from sampled options on individual strikes. So let's say, for example, see if I can do this here. Let's say, for example, that one of the options that's being sampled, is this option here. If we look at, let's say one of the options that is going to the VIX formula is this one, the 22.5 put. Okay, the market right here is 50 cents bid at 120. Right? So maybe you could buy one paying $1, and sometimes these can get like $3 wide. Okay, so let's say right before they sample the price. Now they have kind of safeguards in effect of how they sample these prices now, but let's just say, for example, that right before they check the price of this option, now it's 55 bid at 120. Let's say right before they sample the price, you said, I want to put up a bid. I will pay $1, or I'll pay 95 cents for one of these puts. Well, all of a sudden, the price of this option, the average, goes from something like 70 cents to $1.05, and all of a sudden the VIX moves higher. And what you're doing is you're marking the price of an option to manipulate the VIX. And that kind of stuff has gone on in the past, and we've seen several expirations where the VIX has moved all over the place right before expiration. And it's part of it has been due to people marking stuff. Now, if you have enough at risk, you might actually go in and actually put a real bid in for these options, try to buy like 1,000 of them, and they might fade you. They might say, well, I don't want to sell 1,000 at 120. I'm going to raise the price. And you might be able to manipulate this stuff by bidding it up as well. And this is the kind of manipulation that the SEC has been investigating with the VIX. I hope that gives you a little bit more insight into how manipulation might work. It would be to do with marking individual options. And what makes this illegal is that a lot of times the people that are buying these options, they don't really want to buy them. They're just bidding it up to manipulate the VIX. So that is kind of where that comes from. And they've been trying to put safeguards in place to get rid of that and to make this a more smooth process. But we saw several expirations in the VIX where it was really fishy, where the VIX went up by like 5 points right before the expiration, and then it went back down right after, that kind of thing. And it certainly does happen. But that's kind of the nature of the lawsuits against the VIX. And we continue to rally here. Now, the VIX isn't coming off hardly at all, but the NASDAQ has come back a decent amount here. Yeah, well, the problem, Ted W., is that some of these option strikes, just based on the market moving around, TW says they should use actual trades. Some of this stuff just, if they pick 50 strikes to sample, some of this stuff, it's not relevant to the market at the time. So, for example, if it's an option that's so far away from anyone, from it having any chance of being worth anything, then it's basically worthless. So, they're trying to find different ways of how to address this problem. And to be honest, we haven't seen as much of this year as we saw in the past after various lawsuits and whatnot. But it still isn't perfect. People have proposed alternatives to the VIX and different things. All right, so we are off the lows to some extent here. However, still very high in volatility. We still are down. Let's see where we're down right now. Okay, so NASDAQ down about 6%. E-mini's down 6.66% right now. That's not a good number. And the Dow currently down 7%. With the Russell, as usual, the Russell 2000 is lagging behind everyone else, down 8.9%. I don't know if we could get a rally where we went back to unch today, but I'm satisfied that we're off the lows a little bit right now. And that's kind of where we stand. I appreciate everybody watching. And I am going to go on and try to live my life and not stare at the markets all day. And I would encourage you also to do the same. Thanks, Edward, for your assistance. And thanks, everybody else, for tuning in. And I will see you coming up next time on the Short Vol Show Live, broadcasting live from Cape Cod, Massachusetts, home of the Pilgrims, as I cue up our little exit song here. Thanks for watching, folks.
You're watching Famous Dave.